Okay. So the one of the important issue with the price action is you need to understand the market cycle, support and resistance, trends, and trend lines. Once you understand the market cycle, trends and trend lines, support and resistance, then we will look at the breakouts, pullback, trend identification, trading range, and other price action patterns. So let's start with the support and resistance. Support and resistance is nothing but like a floor and a ceiling. The price is when it starts selling or it starts going down, it's reach a certain level, and after that is a stop, bounce back few times up there, and then move up. It's like a ball. When you just bounce a ball on a floor, it will go up, down, and then finally, as it loses the momentum, it will hit the floor and stays there. So the same thing happened with the price actions and the support and resistance. So very first thing you do when you open your MetaTrader 4 in the morning or whenever you start trading. So first thing you need to do, whatever the period you are trading, whatever the time frame you are trading, you need to draw support and resistance line on that one, so you can understand, yes, the price has reached a particular level or not. So what I will do, I will actually, in this chart, you can see that's, this is one of the support. This is another support. This is another support, and so on. A support line, it can change into the resistance, and a resistance line can change into the support. The reason for that one is that the price actually moved between first support and resistance for some time, and then that pattern will change and your resistance become your support, prices move higher, and that's you can see your resistance, then your support, and move up and up and up and up. So when you identify these supports and resistance, you need to see like which is the current support and resistance and what is your long-term support and resistance. For example, in this chart here, this is a 4-hour chart. And you can see that this is the very strong support here. Prices never come back here, and it's just simply move up and up and up again. Now, when you see this part here, this is the support and this is the resistance. So prices actually try to bounce back from the resistance, but then buyer actually push the market and move up, and that's resistance now become a support. And same thing happening with this resistance level and this resistance level. So you can see the price is bouncing back here and here a few times, and then it move up and here and here. What I will do to make the point of the support and resistance, we will go to the live chart and see some other examples, and we draw and show you how to draw it. So for example, I open a brand new chart here. So this is my new chart. It's got no indicators, nothing. I'll just simply change to the candlestick pattern, and few things I like to change here. When in fact, I should have base, right? So if I remove this, all my indicators, 1 minute. Okay. Delete. Okay, so this is the chart I got for Euro USD 1 hour chart time frame. And all I need to do, I need to know that I want to draw a support and resistance on this chart. Okay, so what I will do, first of all, the first question actually people ask like how back I need to see. To answer this question is for the daily, you at least look back to 1 year. 4 hour, you also look back to the 1 year. For hourly 30 minutes, you simply look back to maybe 1 week or 2 weeks, and that should be enough. So because we are on hourly chart, so we will actually go back and see how far we can go. And here you see this is the 2nd of December, 28th of November, so it's 1 month. That's enough for this. And if we want to draw support and resistance here, we simply use our line and see where is the bear point. So you can see this particular point here. This is the place where the price is actually touch most of the time. So number 1, 2, and 3. So I will consider this one as my proper support. And then now I need to draw my resistance. Okay, somebody got the mic on. Okay. Right, it's Matloob. Okay, it's done. Right, it's good now. Right, so we actually going to draw our support and resistance. So you can see this area here, this area here, this area here on hourly chart is our strong support. When I see that prices is moving again this support, I will be cautious and I will see maybe the price is going to move. So this is my first very, very strong support. Now the next level I need to see where is the next level, because if the price is currently here and my support is here, there is no point try to wait until the prices come back. It may never come back, right? So for example, here, and here, it took how many days? 1, 2, 3, so 1, 2, 3, 4 days. 4 days. I can't wait that long. So how I do it? I draw some other supports, which are the minor supports. And again, the way I will find out the prices where actually they touch most. So for example, I can see this area, here, I can see that it's a kind of a strong support. There is another area here as well, but that's, for example, it's this one. So you can see this also supports here, the one here. Now, most recent one is this one. And there is another one, if you see, is this one. So you can see that's touching here, here, and here. And that's also, there's another one, but that's close enough. So what I will do now, I draw all those support. I haven't drawn any resistance yet. The reason why, because the first thing I need to do, I need to find the highest resistance point. So this is my one resistance point, because you can see the price actually bouncing back here. You see 1, 2, 3. Next, for the 3 hours, the price is actually bouncing against the resistance. And also I can see this, my setup bar here, most likely price is reverse, and it did reverse here, right up to here. Then it's tried to reach again. It's tried to reach again here. It couldn't, and it's only stopping here. And you can see this another, the 3 points where the price actually tried to stay. This is the one. Right up here. And this one. So now all I need to do, I need to actually wait for the prices to come back. If I buy here, I will actually make a big mistake, because I'm actually buying near the resistance. We always buy near the support, the low, buy low, sell high. Buy low, sell high. Buy high, sell low. So people normally what see, they can see those 1, 2, 3 bars going up. They get excited, and then they try to buy up here, right at near the resistance. And then price actually reverse back, and they lose money. So we never, ever going to buy when it's reached to its resistance. If you identify the resistance level and the support level, half of your job is already done. So now what I can do is I draw all those supports. So the style of the practice is that when I put my order, I should place near to the resistance support. So not here, the price is actually moved too much, it's too late. So my entry always will be around that area. always near support is my buy. So for example, this part here, that's my buy. Hang on, what's happened with that? Okay, delete. So this area is my buy. I don't know why I can't draw this line. So let's make a rectangular. That's easy. This one. So that will be where I will buy. Anything above this one is gone. It's out of my range and I will lose money. If I want to sell, I will sell at the top, and most likely that's, I see this, if this is the top or this one is the top, then most likely that's, I don't know until this bar, this is reach at top. So most likely when on this bar, I can see the prices it's touch here and then coming down, then I will sell somewhere around this bar. That's will be my sell order somewhere around here. And it's mean that say the amount of the money will I make if I from here to up here, it will be about 30 pips in 1, 2, 3, 4 hours. 4 hours you make 30 pips times 10, it's $300. Okay. Anybody have any question on support and resistance? Because this is very, very important point. If you don't understand this one, there is no point moving forward. Right. Okay, so what I would ask next is if you guys open your trading platform and try to draw in Euro USD as 4-hour charts or 30 minutes chart and try to draw the support, and then let me know when you finish, I will draw mine and then we see if it's match. If it's not, then you can see like why it didn't match. So just take a 5 minutes or 2 minutes and open your Euro USD and on the 30 minutes and draw your support, only support, don't worry about the resistance. So you need to draw at least 3 support level. One is the strong one, and one is the near current price, and another one is the middle. So Mustan sir actually asked, where is the link to the chart? Or should I draw on the existing one? No, you should have your MetaTrader 4 installed on your laptop. So you open your MetaTrader 4 and bring your chart up there, Euro USD, and just simply draw your support and resistance. If anybody of you understand, we say we should not be placing buy. Now I'm not asking you to place buy or sell order, I'm asking only to draw support and resistance. Only support, not even resistance, only 3 level of support. Okay, so I'm going to switch to the 30 minutes and I will make my support and resistance. So support. This is my first support. So this is my bottom one. This is the top support. And now I need one more, which most likely somewhere around here. Okay. Everybody have the same? If not, then they can ask the question why. All right. So let's move on to another currency pair. We go to pound USD. And here I would like you to draw again the same support 3 times at least. This is your one. This is your most current one. And one somewhere around here. Okay, what do you see from these 3 support? That's the price is actually bounce off this support and then gone off right in the sky. And you can see now in this part here, it's trying to form a kind of resistance because these 2 bar concurrently, they are almost at the same level, they're bouncing back. Can you see, everybody can see this? Okay, so the Tim's question, my MetaTrader 4 doesn't look like yours. How do I start? Okay, so what I will do, I will just divert up for 5 minutes and show you how you can set up the same as my screen. Let's say, for example, I start this one. This is what everybody can see in the chart, right? Right click, properties. We leave the background. If you want to save as mine, is just papaya white, or that's actually a little bit stronger, maybe this one. Okay, so that's color. The foreground, you can move to black or gray if you like. The grid, it's okay. Bar up, line. Bar down is red. Bull candle is line. Bear candle is red. And leave everything else as it is. Then goes to the common area. You change candlesticks. You put show ask price and remove the show grid and says show period separator. And then you got this, same as mine. Okay, I will just close this and repeat again, just in case if you have missed something. So let me see what's the background I got. Okay, so I start again, right click, properties, colors, my background. Is this ComSync, foreground black. You leave the grid as light flat grid. Bar up line, bar down is red. Bull candle is line. Bear candle is red. You leave everything else as is it. Common, choose from bar charts to candlesticks. Show ask price. Remove show grid and click on show period separator. And that's it. Now you got same as mine. Okay. So we were actually in British pound USD on the $30. If this green is too bright for you, you can actually change that color to a little bit darker, which is up here, this one. And you will have a little bit better visibility. Okay. So let's go to the pounds USD M3. We draw one support here, the second here, and the third here. Okay. I'm going to ask you to now US dollar and Canadian on the 30 minutes and draw your support and resistance. Only support 3 times. If everybody done, then I can actually give the control of my screen to somebody so they can draw it. Who want to volunteer? Who can draw? Who want to draw? Okay. Okay, here you go. Okay, so Shams, how do I open the chart screen? How do I start? You just close this front screen so everybody can see. Yep, now you got a control. Okay, do you want me to draw it? So before I draw, let me ask Tim, are you okay with your chart? Can you open it?
Actually, I can't, Shams.
You can't. Okay, so
How do I actually open that chart?
okay, you
Because if I double click the US or euro to US dollars, up with waiting for update.
No. All right. You're waiting for the update. That's fine. You can't do anything now because the market is closed and I think the broker is closed. So you just.
I've been waiting for update ever since we started.
Yeah, no, most of the time on Sunday it's a bit hard. Saturday and Sunday is a bit hard to. If you haven't been trading, then your data is not there. So it will try for update. So don't worry. You can just watch the screen and you can Monday morning.
Wait for it.
Yeah.
Okay. Thanks.
Okay. Right. Okay. So let me draw. First thing I will do is on the 30 minutes, I make it a little bit bigger so I can see exactly where the picture is. And I can see that the first support is somewhere around here. And you can see that it's right up here. See, I haven't seen even that one, and as you can see, it's touching. As I said, the market repeats itself, and you need to know like how they repeat. The second one is you move it up a little bit up here, and because this has got more 1, 2, 3, 4, 5, and 6 and 7 support. So this is very strong next level support. And now we move to the lower time frame, a little bit closer to the current time. And we can see that the resistance is actually appearing here. The price seems to be actually bouncing back here. 1, 2, 3, 4, 5, 6, 7. It's bouncing back here. And then it's a small one is a small support resistance forming around here, but that's fine. We don't need to worry about that because that's too small to worry about. Okay, so you can see this is how we draw the support and resistance. Now, is anybody want to? Okay, that's the price. Okay, so 1, 2, 3, and now anybody can tell me like how we can trade on based on this.
So I've got a question.
Yes. Go ahead.
I just want to confirm. So the picture, your bigger sample size, the absolute bottom is your absolute lower support, and the peak is the top support. The intermediate that for support levels, you see how many lower endpoints are touching a particular line or particular region. If the more in specific sample, your support level, or the peak become the resistance level.
No, so the
more
more
like that.
Yeah. So the more point you touch for the support or resistance, that's become more stronger. That's more valid. And you can see when I see this is the lowest, I can see this 1 and 2 chart actually touching here, and I draw my support line. I even didn't know that in the past somewhere it was also the same level. And that's actually proof that the people actually look at the chart of the past history and then they put their orders according to that. When they put their order according to the past history, it's automatically become a self-fulfilling prophecy. So people who actually put a lots of order here, they knew about this one. And that's why this one and this one, they just become a mirror. If you go a little bit more down, if you see if I can go a little bit further up here. Okay, so as you can see, this is the strongest point is coming up these two, 1 and 2 in the current history, which is from on the last 1 month. If you go into the daily chart for that, see if mine is updated or not. Right. Okay, so you can see that all your things which you have drawn in the 30 minutes chart is actually top of the range on your larger time frame. So on daily, you see it's here. Here, it's what does it say is that in the larger time frame you are in the upper trend, but in the shorter time frame you are in a small portion. The price actually fluctuating a lot at the bottom, and that's why it's very, very important that when you try to make an entry in the hourly chart, make sure that your hourly charts and the daily charts they actually sync in form of like are they in an uptrend or the downtrend. If I go back here again. 30 minutes, that's my 30 minutes, right? And you can see, but this is actually a part of the uptrend at the top range. So this, I can't actually enter on this trade. The only way I will enter in this trade when it's touch again this support, then I will buy long. I will not actually sell on this one. Make sense? Okay. So now let's go to the hourly, and hourly, as you can see, hourly is also kind of the same level of the support. And this support will actually always the same because it's the lowest point. It's a regardless 30 minutes, 1 hour, 4 hour, daily or whatever. It's the lowest point in any case. Even you will find this is the lowest point on the daily on that particular range. So you can see this is the one, your lowest point here, and this was the once upon a time it was a resistance, then it bounced, and now it's touching back here. So my idea is that if the price is touching here, it should go back up, shoot up. If it shoot down, then I don't do anything. I just wait, and it means that it can go down. Remember, we have just learned about the trend cycle, and if you try to make a trend cycle here, and you can try to judge what's happening. So I would say that's low, high, higher low, higher high, higher high, higher low, higher high, higher high, and this one. So this point is a higher low, and this point is here. So according to the next point, there should be, if it was in the right trend, if it doesn't break the trend line, then the higher low should be somewhere around here, but it actually break that line and gone back. So you see, this is another way to judge your resistance level or the support level. So that was the last high low, and the current price actually bouncing off the last high low. So it means it's trying to revert. If it's can't manage to revert, then it means that it will go down. So this is how you kind of interpret the market.
So at this point, you will not buy because it can. It looks like it's going from like you got high, low, and now it started to have consecutive ones.
Yes, that's right. What I will do, I will actually wait for the prices to break through this one. If the prices is breakdown, then my entry point somewhere around here. For shorting, I will short here. But I will not buy because the reason why I will not buy, because it's the price is actually sorry, the price is actually not following my trend line. It break the trend line. Once it break the trend line and it break the last high low, then the market is actually a little bit in a volatile mode, and I don't want to enter in a mode where I don't know the market direction. So I'll wait for the market direction. If market direction says yes, I'm going down, then I will buy. I will short. If market says now I will reverse, then I will wait market to come back above my trend line, then I will buy. I can't buy. I can't actually go this way and buy here. It's a wrong move. Okay, so that was the support and the resistance. Now resistance is always we draw at the top, and we try to see if the price is bounce off the resistance level. If the price bounce off the resistance level, it means that the market trying to push the prices higher, but it's failing, and there is a chance that price will reverse back. If at the resistance level, it seems to be if you got the setup bar, which is doji, or you also got your shooting star or some other kind of setup bar or reversal bar, then you got two probabilities that the prices will reverse rather than one. So you're making your case more and more stronger. You also need to make sure that the prices, if touching the resistance line, then will it break to the resistance upward or it will goes down? That's what you need to actually judge. And that judgment will come from your reversal bar. So for example, one reversal bar is here. And then as you can see, just with the reversal bar, the price is actually moved down right back up here. Then it's gone up. And then up here, it's try to, you can see this touch here, bounce back, bounce back, bounce back, bounce back, bounce back, bounce back, bounce back. So what I will do here, I can see in the past 4 or 5 bar, it's bouncing back. It means that I have to wait and let the prices reverse. But at the same time, I also see that my support here, here, and here, they also very, very strong. And I see the prices is not moving, is moving only between this resistance and support, which is not very big. And I can see, okay. So market does not have a lot of volatility. Market has lost its momentum because all those bars are very, very small. And it means that if I enter here, exit here, enter here and exit here, I will make a very little money, but my risk is very high. So this kind of market where you got the support and resistance, the distance between support and resistance are very, very small, I do not trade on that kind of market. This is another one, support and resistance. You can see here, 1, 2, 3 is touching. Then you can see here, that's the resistance. Sorry, that was the support. Then the prices drop and this become resistance. And you can see that's the resistance, and then it's bounce, and then it's fall back, and then it's become a resistance. So support can always become a resistance, and resistance can always become a support. It's a real possibility for that.
So sorry, the question, like, if the resistance was, you do not trade because the margin is low, or if there is another reason?
Sorry, can you repeat your question?
And resistance are very close to each other, like you were showing us earlier. You do not trade because the margin is too low, or is it risky?
It's a risky because your profit level is too low between the two. If it's only 5 pip, then why do you risk your 10 pip or 5 pip for the 5 pip? So your risk level is higher and your profit is low. Because you know, if it's too close, then you don't know which way the price is going to break up. It's a break up or it's a breakdown. So only for the 5 pip, you are actually losing a lot. So minimum, you need to make sure that when you do trading in a range, the difference between the support and resistance should be at least 10 to 15 pips. Now, these are the bar, very important for you to understand. Setup bar or reversal bar, or you can call it pin bar. When you see this kind of bar at the support, you pay attention because the prices will reverse. You can see this is the green, this is red. It means that your low wick, if it's a longer at least 3 times longer than your body, and it's coming at the bottom of the price, like near the support, then it means that the prices will reverse, and that will actually your one of the setup or reversal bar. So 1, 2, this is the kind of a doji. This is another bar. If you got this kind of green bar in the bottom, then the prices will reverse. But if you got a red bar, then no, it's not. So these 4 bars you need to understand. Just remind those one, print out, put on your wall, and whenever you see those 4 type of bars, this one, and this one, at the bottom of near the support, the prices will reverse. Right? So let's see something in action. Your voice is breaking up, whoever is it. Okay. Right. So now we're removing all those lines. Why it is called the bullish reversal? Okay, Matlub, the reason why we call it a bullish reversal, because when you see this 4 type of bars appearing at the support, it means that the prices will go in the next one, it will go upward. So that's why they call the bullish reversal pattern, because after those candles, the prices can reverse towards the up. So, and when you see this one are coming at the support, it means that they are coming off the downtrend. Otherwise, they won't be at the support level. So 2 conditions it must match. Number 1, near the support, and it should have coming from, it's on the downward trend. So then you will see this 4, the prices will reverse. Right, so let's do something here. Okay, then it should call. Now the bearish reversal is because we are looking for the bullish reversal. The price is coming down, we're looking for the bullish reversal. That's why they call bullish reversal. I can give you an example. For example, let's say we are right here. Okay, this part. So that's the bullish reversal because the price is bullish from now. If you see it's here, it's a bearish because the prices will bear now. It's going down. That's why. So when you see the signal bar at the top, they always call the bearish because we're expecting the next move is the bearish. If the reversal bar at the bottom, we call them the bullish because then we're expecting the next move will be bullish. Right, so we got this Euro Canadian dollar, and we need to look for those reversal bars. So we start looking something here. So this is our support. Now, can somebody tell me, can we find those bars somewhere here? This is the one, right? Right? And you can see if you draw your support, And if you draw your resistance around here in this particular time frame, so let's delete that and delete that. Okay, so we are here. This is the resistance, and this is what we see the bar. So from the resistance, it's coming down, and we can see this is creating a perfect swing point, swing low. And that's why this setup, this bar will actually tell you go long after this second bar. So okay, I'll put it that way so you can actually see if. Okay, so this is where we are right now. Here you can see that this is your support. The price is coming down from this resistance level. You suddenly see this bar, you get alert yourself, right? And then what you do, you actually wait for next bar. When you see the next bar is actually closing above this low, it means that the price is, this bar is getting valid. Now I put my entry right up here for the bullish. Here you go. And then you can see the price actually bounce back. So find another example. This one. Okay, the same thing, the price is coming down. We got this, we see this bar, and we see this is a bullish candle, bullish reversal pattern. And then we see the next bar is going very, very high. So normally the people actually try to enter somewhere around here, and then they goes back up here and then come back. So what my strategy for this one is, because my strategy is always to wait for one more bar after the reversal bar. When I see this one, I will not enter into this trade. The reason why, because if I see this bar and if my entry point here is never going to touch, it's going to touch only here. Not sure that I will be waiting for that long. This is about 1, 2, 3, 4 days. So 4 days means that I have to wait for 4 days and then it will go up. So this is another important point to understand, that if you know what is your entry point, it could actually help you to make your getting you out of the market at the stop loss. Can you repeat? Okay, right. So what I was telling is, I see this reversal bar here, which is a bullish reversal bar. And as my trading rule, I normally wait for another bar after that. If I wait for this bar, then it means that either I can put my entry up here, or I can put my entry here. My normal principle is that I'm expecting that this bar will be lower, or it won't be that long, so it can hit my this entry point, and the next bar will come up here and take my order. But in this case, if I put my entry here, it will exit. I will enter in my order after 4 days, and then I can go right up to that's high, and if I want, I can close or wait, whatever I want to do it. So the problem with this order, what I can see here, that's normally people try to put their order up here. They got it actually entered into the market at this level, and then the prices move down, and their stop loss hit, and they are out of the market. They are out of the market because of this long candle. If the long candle was a little bit shorter, they wouldn't have been out of the market. So you need to be very, very careful what's happened after this candle, this reversal candle. What is the next candle telling you? Sometime it will tell you to enter into the market. Another time it will tell you don't enter into the market. It's very tempting. The temptation is there to enter into the market because the long candle, but you need to understand that it's a bit risky game here. So I normally, whenever I see the reversal bar, I wait for the next candle and I put my buy stop around the high point of the reversal candle. So when it's hit that, I'm in the market. So remember those ones, bullish reversal candle. If you see those reds at the bottom, don't use this one. This is not the reversal candle. And this is your bearish reversal candle. You will find that finding the bearish reversal candle are much easier than the reversal bullish candles, because these peaks or these tops, they actually stand out at the top. So it's very, very easy to identify those one than the other one. And again, the same thing at the top of at the top of the resistance level, you see those kind of candle with the green body, half of the body. The wick is actually half of the body size. Then just don't take as a reversal candle, because it's not a reversal candle. These four bullish, and these four are the bearish. So let's see some bearish candles reversal here. Okay, who can identify? Anyone?
Shamspai, the last candle in the chart that we is a bullish reversal candle. Is it true?
This one? No.
Yep.
Yeah, this one? We're looking for the bearish, we're not looking for the bullish. So this is
it's bearish. It's going.
Yeah. Sorry. Yep.
The last one is bearish reversal candle, because it's going on the upward trend and coming back with a hammer, like with the head at the top.
This one? No. So okay, so you need to understand the two. The bullish reversal have the lower long wick, right? And the bearish will have a lower high wick. Sorry, long higher wick. So this is long high wick, long high wick, long high, long high. Here, long low, and long low. Based on this one, I will actually not pay attention to this one, because at this stage, I am only looking for the bearish reversal candles. So this is the one. And where is the other? That could be one. Okay. And that's third. And that's third. And I think this is the fourth. Okay, I don't have much data. So let's go to the 4 hours. 1 hour. Okay. So this is the 1 hour chart. And I think it can go up to 1st July 2016. So you can't go anymore. Okay, so let's start from here. Reversal, this one, reversal bearish. This is one, and This is another one. There is the third one. This is the fourth. This is the fifth. This is another one, these two together. This is another very strong reversal candle. And then you can see the price has actually dropped a lot. It's moved back again, but how many days is the 1 hour chart? So it's 1, 2, 3, 4, 5, 6 hours. So for 6 hours, the price is actually dropped and then gone up. Anybody knows this time around, 26th of July, when the Brexit happened? Is the same time? Okay. Now, once you understand this, the reversal candle and the reversal patterns, then now the next thing comes to the market cycle and cyclicities. Cyclicity means the prices goes up and the prices goes down. You need to understand that when you need to understand where the price at that particular time in a market cycle. So market goes up, market goes down. If you know at the current level where you are, that's help you to understand whether you want to enter into the market or not. So each cycle have a two phase, phase 1 and phase 2. Each cycle have 5 sections. Some section will help you, some section where you can buy, some section where you can sell, and some section where you don't do anything, just wait for the market. This is the market cycle, one market cycle. The prices from here is going up, it reaches peak, and then it's coming down. This is your phase 1, phase 2. When you are long, you always buy into the phase 1. You never buy into the phase 2. Even the prices is coming and touching here, you wait for the second cycle of the phase 1, phase 1 of the second cycle, and then you enter in the market around here. Sound is really bad. Okay. It's maybe because you are on an iPad with the mobile data. Okay, I can repeat because there's 2 people telling me to repeat. Maybe my internet is not good today. All right, so market always goes in a cycle. Each of the cycle have 2 phases, phase 1 and phase 2. Same with the audio, but it's an afternoon session. Okay. Right. So market got, again, as I said, in the 2, market goes into cycle, phase 1 and the phase 2. Phase 1, when the price is going upward, and the phase 2, when the price actually reach the peak and come down. Each market cycle have 5 phases. Phase 1, section 1, section 2, section 3, 4, and 5. When price in the phase 1 of the section 1, this is the area where you actually make your buy order, put your buy order. Section 2, section 3, section 4, and section 5, you do not do anything at all. You just simply wait. You don't buy here. If you buy here or here, you will start losing. First of all, when you are long, you always buy in the phase 1 of the market cycle and the section 1 of the phase 1, which is near your starting point, higher, low point. So this is the point where you actually put your market orders or your buy order. If you are somewhere around this part and you see that the price actually moving up, you wait until the phase 2 is complete. This next cycle start, and on the phase 1 of the next cycle, you will buy here. This one called retracement. If for whatever reason you buy here, the prices will actually drop you down and bring it here, and you will lose your money. And because your stop loss somewhere around here, so you will actually kick out of the stop loss. So understanding the market cycle is very, very important. You need to know where to buy and where to sell. So this area again is to buy. This one and this one is no man's land. Don't do any buying here. You want to sell, you can sell around here, but here, no. And you wait for the market. This is what the market cyclicity, actually you can see that the price is going up, phase 1, phase 2 of the cycle 1, phase 1, phase 2 of the cycle 2 of the market price. When you actually connect those points, and you draw a line, that's become your trend line. So remember when I said, if the price is moving up and you are somewhere here, you wait market to retrace back to your trend line. And when the phase 2 is finished and the phase 1 is start, then you enter into the market. Many times what's happened, people actually understand this concept and they see this price is going up, they're waiting to price come down. When the minute the price touch, they enter into the market. Now you don't know that this retracement is a retracement or is a change of the cycle or change of the trend. You don't know that one. You only know that one after the trend actually turned around, the cycle turn around and goes into the next cycle. So always never ever do any buying on the phase 2, even that you want to go long. So you actually, your price is starting here, you reach the top, wait for the retracement. After the retracement, wait for the next cycle. Phase 1, that's your entry point. And then there you go, all the way. आपकी आवाज ब्रेक हो रही है, लिख दें उसके ऊपर.
Okay.
Okay, so he's writing his question. Sometimes the cycle is short. Yes, if the cycle is short, you still wait for the next cycle. And if the cycle is short, you need to know that you are not 100% all the time. What we're trying to do, we're trying to actually make sure that we are right most of the time, not least of the time. Okay, so you say, how do you know that's the second section? Okay, so let me go back. The prices near to the start of the cycle on the phase 1 is your section to buy. When you see 2 or 3 bars already move, then you are out. If the price is moving this direction up, this is your phase 1 of this cycle. So first of all, this entire thing is a cycle, right? This is your phase 1. This is your phase 2 of the cycle. And these are the section of those cycle. So section 1 is always near the start of the cycle. This is your buying. This is your buying. If the prices already move up here and here, you don't do anything, you wait. If the prices move up, then that's fine. You haven't lose anything, you just missed one trade. Okay, I know the problem, Matlub. I'm coming to that. Right. So when you are buying here, so the reason why So when you see this section 2, section 3, section 4, section 5, don't buy anything here. You can sell here, but you don't buy here. You wait for the prices to come back. So that this is the one, it's come here, and then you wait for, this is your next cycle now starting, right? And then when the next cycle is starting, this is your section to buy. And the reason you know this section to buy, because you have your stop loss somewhere around here and your take profit, whatever you want to put. But you know that the price actually has turned back. And you know here, when this area you see, here you will look for the reversal bar, bearish reversal bar, or the bullish reversal bar, or whatever the signal you are waiting for. If those signals, the bullish or bearish signals, appear somewhere around here, they're not valid. They're only valid in this area. So that's why this is very important that you wait for the prices to move up, change this phase, go to the phase one of the next price cycle, and then you buy on this area. And if you see here is a reversal candle, then that's your actually buying strong buy signal. Near is a relative term. Yes, you're right. So if the first leg is long, my section 2 start a bit late. It's a bit later than losing the money. Resistance you're looking for at the top, not at the bottom. Here we're talking about at the bottom. At the end of the phase 2. Now you won't see resistance at the end of the phase 2. The resistance will be start of the phase 2. So your resistance will be here. That's the start of the phase 2. That's your support. Right? So that's your support, that's your resistance, and you see the resistance, and then you can actually sell if you want to go short. So sorry, you can actually close your position. Yes. So support, yeah. Shall I expect to see a support level? Yes, you're right. This is your support. This pattern here, this one is your support. And this is here, you will see that the prices bounce the support and then go up, and you enter into the phase 2. And I think I know that's why people actually lose money, because they misunderstood or they don't understand this concept properly. So what we can do to make it more better, we just go to the trading screen and we look at the Now, first thing what you need to do, you need to identify yourself without drawing any line, support and resistance, right? So I will actually draw this way here. Okay. Now, if you look at here, this is my cycle 1. Sorry, this is my first cycle. Phase 1, phase 2. Yes, I know that one. How I know that I'm entering into the phase 2 or not? What we need to do, we need to actually look very, very closely this area. This area will tell you are in a phase 1 or phase 2. Right here, somebody see this one and say, oh yes, now we are on the phase 2 is ending and this phase 2 is starting. But you see the size of the bar are too small, too little. It means they are in the sideways market. So you don't want to make any entry here, because maybe this is just a kind of a retracement like this, the small retracement. Maybe this is not the swing low point. So you wait for the swing low point. Your swing high is here, your swing low is here. This is not your swing low. The definition of the swing low, 2 to the right and 2 to the left. So you got 2 high, and middle is low. You don't see that swing point around here, but you can see a swing point here, because this 2 is a high and these 2 are the low. So that's your swing point. So you can see now that if you want to understand your entry, you need to understand your trend. You need to understand your trend. You need to understand your market cycle. In the market cycle, in the phase, you need to understand swing high and swing low. So they all now becoming to interrelate to each other. If you don't understand any of those, then you will not understand this market cycle. So swing point, swing high, swing low, they are very, very important to understand. And this is not, I don't see this one as a swing low. I can see the swing low here, but I don't see swing low here. And people will lose money if they enter market around that mark somewhere here, because the market is actually bouncing back here, and then they have their stop loss. If you see this swing low, you have your entry point around that mark here, just up here. You are long all the way. You're not coming back. Okay, so Nasir, this is clear now why you're losing your money? Right, so let's look at another example. So now that's this cycle, you're going in the up. The second cycle, phase 1, phase 2, phase 1, phase 2. And here, somebody if actually looking at this bar and they enter the position, then they will go down all the way. Because there is no swing low here. You don't see any swing low. Swing low, swing high, very, very important to understand your market cycle. I can't do anything about the sound because I got the maximum, whatever I got the bandwidth, it is there. The only thing I will do is when we go for the break, I will reset my modem and see if something we can get it better. That's the only thing I can do. So we will go in a break in about 5 minutes and then I will reset the modem. So if I drop out, then everybody will drop out, so we will rejoin. Right. Let's pull up another example because this is very important point. Now, this is phase 1, phase 2, where you see the swing low. This is your swing low. 2 to the left, 2 to the right, that's swing low. Then you all the way to the up, then you down. So here you don't see any swing low. If there is no swing low, then it means that the trend is changing, and you can see here. So swing low, swing high is very, very important. Now, to make it more simpler and easier for you, there is an indicator which I normally don't use, but if you want to use just to understand, you can use it. It's called zigzag. You drop it here and make sure the value, I think, is 5, 2. I think it is what it is, 3. There you go. It's drawing a swing low and swing high for you. Even though this one is wrong because this is basically swing low, not this one. But it's not accurate. It's all mathematical calculation. But you have some kind of idea. Yeah. Okay. So what we will do, it's 2:55. We go for 10 minutes break. I will close this session and reset my modem and see if I can make anything different for the voice. All right, so we come back on 3:05. Okay, you want me to try headphone? Let me see if I got headphone. No, I don't have a headphone, so I have to use. I got this mic which next to my mouth, so it should be very, very good. Yes, it is right. It's maybe the bandwidth issue. Even though I'm on the NBN, so I don't know. It's performing very bad for today. Hello. Walaikum Assalam.